Hello, my name is Steve Bigelow with the Candlestick Forum. Our special recommendation is based upon one of your strongest candlestick signals, the kicker signal. We're going to show you kind of how to read candlestick charts, because once you understand what the signals are telling you, you gain a very powerful perspective for being able to analyze which direction you should be establishing trades for the highest probabilities of good profits. As we saw in the Dow this past week, when they gapped it down and traded much lower, that told you with that gap down in the oversold area, it was time to take profits on short positions. The Japanese rice traders say, where do most people sell? They panic sell at the bottom. Candlestick signals provide those graphics for us to tell us where the investor sentiment is just bailing out. So the next analysis is, are we in an uptrend? Well, this was not actually a candlestick reversal signal. It's not quite a hammer signal, but it was a bullish signal, which implied there'd be a bounce back up to the T line. But once we got to the T line, notice what happened. They failed to get through. So the Dow continues to trade lower. So there's a very simple assumption. As long as you're trading below the T line, the downtrend remains in progress. It was also easily illustrated over here on the NASDAQ that when they gap down well in the oversold area, you start watching for a reversal. This actually did a signal, your piercing signal, right about the same level at top or bottomed out before. However, today's trading showed that they could not keep up above the T line. And remember the simple rule we just mentioned, that as long as you're closing below the T line, the probabilities are that you're still in a downtrend. So with that, whenever we know what the direction is, we want to find the most powerful trades moving in that direction. And the kicker signal is your most powerful individual candlestick signal. If you're in a downtrend and have a big bearish candle, the next day, if they gap it up above the previous day's open and go the opposite direction, that investor sentiment has been kicked in the opposite direction. If you're in an uptrend and they gap it down or they're opening at or below the previous day's open and go the opposite direction, the bears have kicked the investor sentiment in that direction. Why are these signals so strong? Because as you can see, the gaps are already built into the signals, illustrating a strong reversal of investor sentiment. So a couple good strong recommendations. PUBM today did a kicker signal. Notice how it opened here, closed here, failed at the 200, gapped down below the previous day's open and went in this direction. That in itself tells you there's strong bearish force that failed up here. You add that to the fact that over here we had a bearish flutter kicker signal. Bearish flutter kicker signal was they gapped it down, did a doji or indecisive type day at the previous day's open, and then opened it lower. So if you took out this little flutter, you essentially had a bearish kicker signal. If this one opens lower tomorrow, you can start shorting this trade. Same thing over here on Borg Warner. A bearish flutter kicker signal implies wave one, wave two. You can see where the support level was here, and now you've got a bearish flutter kicker signal. Again, if you took out this little flutter, you essentially have a kicker signal indicating a strong force to the downside. Another one that you could short on weakness tomorrow. And if the markets pick up strength for some reason, you can add the fact that the strength in this chart is based upon a bullish kicker signal forming a J-hook pattern, and more decisively, a Bobble breakout. A Bobble breakout is merely a J-hook pattern that came up, failed at an obvious resistance level, pulled back, did this slow rounding curve, kicker signal, which is a strong bullish signal. And the fact that they've closed it above the resistance level, if this opens positive, that confirms the Bobble breakout, which acts extremely strong, even stronger than just a J-hook pattern, because we're watching the J-hook pattern. Everybody else is watching the fact that it came back up through the 50. That's when they start piling in. All the information built into a candlestick chart is telling you exactly what's going on in investor sentiment. We will be doing a 2-day training on March 26th and 22nd. I'm sorry, 26th and 27th. This full 2-day training not only helps you learn the candlestick signals, the 12 major signals, the 6 or 7 candlestick patterns, but all the elements that are built into candlestick analysis. Your strong entry strategies, when to take profits, where to set your stop losses, how to scan for the best trades. Everything that is applied to candlestick analysis is mere common sense put into a graphic depiction. We do it in a 2-day training where everything that you identify in a candlestick chart, we go through in kind of a chronological order so that not only do you recognize the signals and understand how they work, but now you understand the whole concept of candlestick analysis, making a very powerful trade platform because you understand what moves prices. That'll be it. We'll see you in the chat rooms.